Selling pressure continues in the oil markets today. We're seeing selling pressure in both the WTI and in Brent. We saw the WTI down better than 1%. We saw WTI break the 63 handle. 62.66 was the low. Seeing a little moderation as we close out the day. We're seeing Brent back to the flat on the day, but overall for the week, still some downside pressure. And when you look at what took place in October, we saw a 2-year low as far as the selling pressure, the biggest drop in a month over the last 2 years when you saw how WTI was priced 11% lower. Now the first 2 days in November, we're continuing to see selling pressure in both the WTI and in the Brent complex. Some of the issues here as we move into November, we got economic slowdown. I think that's being priced into the commodity space and parlaying into the oil markets. Also the concept of supply and demand. There's still the concerns here that possibly the supply ramping, moving into the Iranian sanctions, might be able to meet the current demand. And again, I think that's part of the reason why you're seeing the weakness. But really, today, the big announcement came out. According to a Bloomberg report, the administration is going to offer waivers on Monday to 8 countries, primarily in the Asian markets. When you look at Japan, China, South Korea, and India as well, that's probably the largest catalyst today, why we're seeing continued selling pressure. Now that it looks like that oil will remain in the market a little bit longer. Interestingly enough, they are not offering it at this point to the European countries, so I find that dynamic a little interesting. But overall, again, it looks like that supply is going to maintain to some degree as we move into the fourth quarter, and therefore possibly was being priced into the market over the course of the last couple of days. When you move to activity, let's look at activity on the futures. When you look at the WTI specifically, seeing a big spike in futures activity here the last several weeks. Average daily volume up over 400,000 contracts a day, and actually near term average daily volume is better than 650,000 contracts today, and we are over 600,000 contracts traded today alone. So you continue to see increased futures activity, primarily due to the volatility in the marketplace, as well as possibly some stops being taken out as we continue to see oil push down the levels that it has not attained since earlier this year. So again, some dynamics in the marketplace. And also when you look at the options market, December options, the $60 strike, a lot of activity there, and the $60 put strike, as well as the $58 put strike. Those are two of the most active option markets today as we continue to see this downward pressure in the oil markets.